In this presentation, we will continue on with our comprehensive problem for an S corporation, part number 11, dealing with officer compensation. We're going to enter this into tax software and the tax forms, Lacert being the tax software, Lacert being owned by the owners of QuickBooks, which is Intuit. The data input process and the generation of the forms will be similar with other software as well. We'll also provide you with the forms, or they can be found on the IRS website at irs.gov if you would like to fill them out directly. Here we are with the 1120S. You'll recall last time we're remaining in balance. So we're going to say, hey, in page 4, which is the Schedule L, the balance sheet is in balance. Now we're going to make an adjustment and see if we can remain in balance. We're going to go back to page 1. The main adjustment we want here is going to be related to the wages. So you'll recall last time, if we go to our Excel sheet, that when we entered the data, we had the compensation, which might be called wages, it might be called salaries, it might be called W-2 income, whatever. It's going to be the employee income at $700,000. Now, it was only here at one line item on the trial balance. Now, the trial balance could be breaking things out. If we look at the income statement or the trial balance, some companies will break out officer compensation, or more likely, they'll break out other types of compensation like salaries or sales versus administrative type of compensation. But oftentimes you won't have the officer's information broken out here. So we went ahead and we said, okay, we're going to push forward even though we don't have that information at this point, because we want to make it as simple as possible to tie out to the taxable income first and then go an adjustment and make an adjustment for that. So that's what we're doing now. So where would we find this information? We would have to go into some kind of data for the wages, typically possibly the W-2 forms for the officers. So we'd locate who the officers are. We would then look into the payroll information. We'd either get some report that would be generated for payroll or the W-2 forms for those officers and determine the amount of compensation related to the officers of the total compensation that is reported here. So first we need to know what that compensation is. If I then go to our data on the right and I scroll down and we say, all right, if we look up the W-2 forms, we would be able to find the officer compensation here. We're saying that the officer wages were for the one officer, let's make this green, is going to be the 100 and then the other 80. So Tim and James. So if I go back to our tax forms, this isn't going to be an M1 or Schedule K adjustment. It's just going to be reallocating between two different line items on the first page of the 1120, basically the income statement of the 1120. So I want to put the officer compensation up top here. So if I jump to that screen, you have an override. I don't want to do the override. I want to enter the officer compensation. Officer compensation. That's still not where I want to put it. I want to put it here. Officer info. Officer compensation. So we have the two officers, and I want to list out them directly, their compensation here. And I have their, and again, in practice, you might have their W-2 forms or some kind of detail of the payroll information to get the compensation for the officers. I'm going to say it's $100,000 for Tim, $80,000 for James. So $100,000 here and $80,000 here. Now, if I go back to the forms, now I'm at $180,000. I still have the $700,000 now. And if I go to Schedule L, that will of course throw us out of balance, you would think, on the Schedule L. So now we're out of balance because we need to take it out of the other line item. If I go back to page 1, we need to take it out of the 700,000. Needs to be going down by that 180. So I'm going to go back to the detail. We're going to go then to the deductions, and we want to go to that 180 or to the 700 and take it down by 180. Again, I'm going to make an adjustment at the bottom of it, and so I can see the journal entry that we made. And then I'm going to say this is going to be officer compensation, and then I could see the original number basically went down from that, and the other side should be going into officer compensation. If I then go to the forms, I could see, okay, this one went down and then it went into the officer compensation. That should take us back to the 63,510, and it should put us in balance. I like to check the Schedule L pretty often because that'll tell me if I'm in balance. That makes me feel good that something's going right. So we're in balance here. And then we're going to go back up to the page 1 and see if everything still ties out. So we should still be at the same balance numbers because all we did is reallocate. So now we're at the 63,510, and we need to do that adjustment over here now. So what I'm going to do is I'm going to take this compensation. Now note that I don't have any other line item in my Excel worksheet because I pulled this over directly from the client information. So I'm going to have to add a line to Excel. This could be a little complicated for when you first do it, but there's a couple ways you could do it. Now you don't want to add a whole row. I just want to add some items here and push the rest of the data down. The easiest way to do that is I'm gonna highlight the cells that I want to add. I want to highlight a few to the right because I want to put a cell above this for the officer compensation. And if I scroll down, I don't want to mess anything else, so I have to include these two rows or else it'll get shifted out of balance. So what's going to happen is this whole thing's going to move down when I add another some cells that it will be here. So I'm going to select all the way from L24 to S24, right click on the selected cells, insert, and I want to shift them down. So I'm going to move them down. And then I'm going to create up here, I'm going to say officer compensation. And I'm going to break out the officer compensation. I'm going to put a 0 here. And then I'm going to have the same formula down here, which is the sum across. And then I'm just going to reallocate between these two. So I'm going to then say that this is going to be a tax adjusting entry. We're going to say this equals the officer compensation. And the other side is going to be the compensation. So officer compensation is going to go up by 180,000. And then the other side is going to go down by the 180,000. Well, let's record this out. Officer compensation in P24 is going to be equal to that 180. And then we're going to say in P25 equals the 180. So now we got the 520 and the 180. Now you might say, hey, well, I don't even need to do that. I can just do that in the tax return over here. And why do I need to adjust it over? I could tie out the same bottom line number, and then I could just see in the tax return it's broken out. You could do that, and that's fine. But just note that the more you do that, the more you do those kind of adjustments that you're kind of just doing in your head, when things are off and you have to go through and tie this whole thing out, then it's going to be more confusing because you're going to have to remember that. And you go, oh yeah, that's the one that I broke out between these two numbers and those two numbers. It's easier, really, if you tie this thing out exactly. And it's also a lot easier if you have to go back to it 3 years later, if it happens to be audited, or if a client has a question about it. And it's also a lot easier for a supervisor or for the next person next year, if you're a partner or something, for the next person who's not going to be you, right, that can't read your mind, to be able to see this information and tie it out exactly. So for all, and really, like, if you go into this information 3 years later, which is often when that's going to be the statute of limitations for the taxes to be audited. That's the minimum. It could be larger than that if there's a substantial error. You're not going to remember things that you kind of just said, well, you could figure them out again, but it's worthwhile to have something as easily as possible not to figure out. It's really worthwhile to also, to help out your supervisor, that's going to make them happier if you have everything tied out, even if they don't tie everything out themselves, because, they're going to do those shortcuts and whatnot. And it's also, if you're a partner, a lot easier to get help. Like if you're having someone else and you want them to do the return next year, you say, hey, could you do the return? If they're able to read the notes and tie more numbers out, it's going to take less kind of oversight to explain your rationale on how these two numbers match that number. If you tie everything out, the more you can tie everything out, the easier it'll be. So we have these two here, and we're going to tie them out over here. So we have them matching our compensation numbers on this side. Bottom line numbers then still tying, they should be the same, 63,510. We got the 63,510. If we then go to page 3, we got the 63,510. If we go to page 4, we have the 73,510. If I go back over here, we've got the 73,510. Same adjustments in terms of the Schedule K adjustments. Back to the Schedule 9, and if we go down 1120S, if we scroll down, we're still in balance, so that looks good. And then we go to the M1s, we're at 85,710 and the 73,510. So we got the 85,710 and the 73,510. So everything looks good going forward.